Hey folks, Dan Frio here with your closing bell for April 28th, 2025. So the news we have today is, well, mortgage rates are down a little bit. We got the stock market up. And then also, if you're out there and you've been waiting for home prices to start coming down, this is going to make a lot of those crash and doom videos people really excited, because we're going to have an interview with Diane Olick right through here. Home prices decline in some of the major cities. And we're going to look at that, look at those numbers, and we're going to check for the accuracy in those, because if home prices are going down, I'd be more than happy to let you know. But some of the data, like I always say, you can't judge a book by its cover. So without further ado, let's get to today's news. Well, my name is Dan Frio. Hopefully I can be your nationwide mortgage loan officer, where I'm licensed in all 50 states as well as Puerto Rico. I'd love to be able to help you if you're looking to build, buy, or refinance. Our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. I'll give you all that information at the end of this video. But I want to explain to you guys what's going on with these things, what's going on in the other markets, and then also we're going to dive into Austin, Texas today, the poster child of the home crash. We're going to look at that data and how bad is it? Well, this is important to anybody out there. If you really want to look at some of you can't, like I always say, judge a book by its cover. I'm going to show you the analysis of Austin, Texas, and then we're going to look at 5 or 6 other ways to analyze the data, and you're going to see how skewed the data really is. So what data can you really trust? So let's get over to it. So right through here, here's what we saw. We basically saw mortgage rates come down across the board all the way on all 6 programs that we're seeing on the screen right through here. Just so you guys understand, these aren't my rates, folks. How I get my rates is we're actually set up with 33 lenders. So I work at a federal bank, and we're also set up with 33 other lenders. Well, that's how our rates are coming. That's how we get you one application, one credit pool, and we get you quotes from 30 different lenders, because we have 30 lenders in our arsenal. But these rates right through here, these are published by Mortgage News Daily. They do a fantastic job surveying lenders each day, asking them these questions. To qualify for these rates, what you have to have is these five criteria. These people have a 780 credit score. They're putting down 25%. And that probably already disqualifies you now, maybe. But these other 3 pieces of the criteria, they probably fit exactly what you're looking at. They're buying their first house, going to be a single family home, and they're actually going to live there. So if that's you, well, that's probably what your rate's going to be. But again, these people have a 780 credit score, and they're putting down 25%. So if you have a little bit less of a credit score and you're not putting down as much money, please check out all my information at the end of this video. So what's going on in the markets today? Well, kind of nothing. We didn't have any news basically on tariffs, because we also have China still saying we're not talking with the United States. So there's really no data on the tariffs. We really have no financial news that's coming out that's really shocking in all the market. But tomorrow, here's what we have. We have the JOLT index coming out tomorrow. That's going to give us a lot of data on jobs. We have GDP coming out the next day, and the PCE, the number one inflation number that the Federal Reserve monitors. And then on Thursday, we have initial jobless claims, manufacturing, and then on Friday we have the true unemployment rate. So every day data is coming in that's going to be, a market mover. Just today there's nothing there. So what I thought I'd do is go over to here. We have Diane Olick. She's getting interviewed today talking about home prices, pressures on homes, and everything else, and why people aren't buying. So let's get over to her. There was a report that just came out. She says that home prices are starting to crack in the 5 major metropolitan areas. So let's get to Diane and see what she has to say about it.
Tough time for the home builders, significantly underperforming the overall market over the past 3 months. It's just one part of the overall health of the housing market, which is in the middle of a big shift this spring selling season, something we haven't seen in a while. Diana Olick here to explain. What is going on, Diana?
Well, Sarah, it's all about home prices. They're still gaining, but they are slowing down quickly. And in several major markets, they are now lower compared with last year. Take a look at these numbers from Parcel Labs, which runs real-time price data. Miami, Atlanta, Tampa, San Francisco, Nashville, and Minneapolis are now negative year over year in prices. And Austin, a major pandemic migration market, is tanking. Other large markets like Phoenix and Denver are right on the verge of being in the red.
Okay, so I'm going to stop it right there for 1 second. We've been being told that the market's it would crash 3 years ago, then 2 years ago, then 1 year ago. They're still trying to pump this narrative, and we'll go with it. But look at most of the markets right through here. They're down 1% or 1% or 2%. Well, they've been up, some of these markets have been up 10, 15, 20% last year or the year before, and then the year before. So to have it basically neutral or -1, if I'm a homeowner there, I'm still in a great position. If you're looking to buy, maybe it's back down to normal. If you're buying in a market because of its great appreciation, Well, think about it. The great appreciation is one of the things that just priced you out of that market, most likely. But let's continue on with Diane's information. But I am going to dissect because this is saying Austin, Texas is down 22%. I question that, and I'm going to dig into it here in a second.
Another report from Redfin showed home sellers gave concessions to buyers in 44% of sales transactions in Q1 of this year, and that's up from 39% a year earlier and just shy of the 45% record high at the start of 2023. Those include money towards repairs, closing costs, and/or mortgage rate buydowns, but not price cuts. Now, something else in the March numbers that was a little strange. The median price of a newly built home was slightly lower than that of an existing home. Not normal. There's usually a price premium for new construction. Part of this is the home builders lowering prices and offering more low-priced homes and a still relatively tight and overpriced existing home market. Remember, home prices are up over 50% in just the last 5 years. That is something else that is not normal. So even with builders cutting prices and more supply coming on the existing home market, buyers have hit the pause button right at the height of the all-important spring market. Sarah?
And there has.
Okay, so did you get her point at the right there at the kind of at the end part? Home prices are up in many of these areas 50% over the last 5 years. And again, you guys have been being told there's going to be a crash. Okay, so now let's go down the crash narrative, because could there be a crash? No, not really. I mean, unless you have some areas, that are just deteriorating, or there's a reason for that huge deterioration. But let's just look into. They said Austin, Texas was down 22%. So do I know the actual numbers? No, I don't really know if anybody does. And let me show you why. So here's what we're going to do. We're going to go to Austin, Texas. This is Zillow. Zillow's saying Austin, Texas over the last year, and this says values 522 down 4%, 8%. Okay, in the past year. Okay, when's this done? Let's see if it gives us the date. It might be right in front of my face. I just don't see it. Austin, Texas. Well, I know it's current, but let's go over to here. This is Austin, Texas, March of 2025. Okay, so pretty darn close. So I'll zoom into this. So somebody make sure you get all the details. Okay, so that's what's happening in Austin, Texas. Data through March 31st. There it is. I knew it was right in there. Of 2025. Okay, we're in April, the latter part of April. So if it's down 4.8%, okay, that's what it is year over year. Well, let's go to another one. Let's go to Redfin. Now, Redfin, what's Redfin telling us? It's median sales price, median. Well, let's make sure there's median, average. There's all kind of different things. So this says typical home value. Okay, so this is the typical home value is down 4.8%. We have the median sales home down 0.49%. You go over to Gemini. I'm just using all AI now. Watch this. Okay, so I went into Gemini and I plugged in this information. Austin, Texas home prices. I want to know what home prices have done over the past year and what forecasts you have for me, because I'm looking to buy in that area, and what advice would you have? So that's all I put. I'm like, I'm just a home buyer. Give me the data. And I'm not trying to pre-feed it data. So here's what this one tells us. This is Gemini by, I think it's Google. The Austin housing market has shown some interesting trends over the past year, and this goes from April of 2024 to April of 2025, and it has a complex outlook. Overall price stability with nuances. While some reported indicates a slight year-over-year decrease, I gotta zoom this up. And this is just one of them. We're going to go through 3 AI systems to analyze the data. Okay, let's see. Around 0.5 to 2.7 decrease as of March or February, March of 2025. Others show a slight increase in median sales prices in city of Austin, around 1.5 to 4.4. So it depends on the data that you pull. I just want all the data I can find. High end, so forth, top 25%, price per square foot, around 1.2 decrease as of February, so 1% decrease per square foot. Inventory, the number of active listings are significant, increasing the Austin area compared to the previous year, indicating more options for buyers. Slowing sales, and the data goes down through here, but the forecast. Stabilization in moderate growth. Some forecasts suggest a period of stabilization in 2025. With potential of modest price increases, continued buying conditions, get pre-approved, and so forth. So that's Gemini. Let's get over to ChatGPT. Now, everybody's heard of ChatGPT. Let's break it down so you guys get the content as well. So Austin price, I plugged in the exact same information. Okay, so what's Austin prices? Median home prices as of early of 2025 show a 7.7% year over year decline. So we got a 7.7 there. What do we have here? Price increase or decrease? It's all over the board there. We have Redfin saying it's down 0.49 and Zillow saying it's down 0.48. So I'll kind of go through that. And it's going to go through and give you all the details. Inventory levels, timing on the market, forecasting, what it's forecasting of 2025. Price stabilities. Experts predict the housing prices in Austin will remain relatively stable in 2025 with a potential modest growth because of demand and so forth. So it's giving us saying, okay, just be careful. And then you go to Austin, Texas. This one is, I think it's what it's called, Gus. And I don't really use this. I just tried it first for today. But it's only given us data, basically, I think through the end of like 2023 or something like that. So I really didn't put much emphasis on that. But my whole point is, hopefully you learn something to this. What are we going to learn? Don't take my advice for it. Don't take YouTubers. Do your own research. Here's what I would highly suggest you do. And I think ChatGPT basically gives it to us right at the end. What are you going to do? Advice for prospective buyers. Timing. Consider purchasing during fall and winter months when competition among buyers is a little bit lower, but this might be the time for you right now. But this is just some advice. Negotiations with increased inventory and longer times on the market, you have a little more potential to maybe have them pay your closing costs and maybe bring down that price. All right. Interest rates. That's why you're watching me. Pay attention to interest rates every day because just 0.25%, even 0.5% in rate is going to make a huge difference in your payment. And then research. All I'd ask you to do is make sure you get a realtor in your local area, the very area you're looking to buy, and they need to be a resident there. They need to know everything about that area because that's where you're looking to live. So don't take any of this, stuff as advice. Do your research, but use some of these components for your research, but you can see how confusing the data is. Is it down 22% as CNBC reported? Well, not one of the reports I found has anything even close to that. So make sure you do your due diligence when you're looking to buy. So my name, like I said, is Dan Frio. Hopefully I can be your mortgage loan officer if you're out there looking to, we really don't help with people with building homes. But if you're looking to buy, refinance, looking into debt consolidation loans, refinancing. Maybe it closed, a year and a half ago at an 8% rate. I'd love to help you. Okay, our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Let me tell you a little bit about myself. I've been doing this for over 35 years. I work at a federal bank. The cool thing about our bank and the reason why I'm here, and the only reason why I'm here, is because we're set up with 33 other lenders. So that's how we have the ability to get you quotes from all of us. So what you're going to do is you'd work with me during this whole process, but you can go to therateupdate.com, put in your application, schedule a phone call with us, or even give us a call and find out how we might be able to help you navigate the home purchasing or the refinancing of your home. Now, if you're a homeowner currently, we have a RateWatch tool right here for you. You can put in your information on your current mortgage, and when rates hit wherever you want to look to refinance, let's say you closed and you're at 7.75, and you're like, Dan, when this gets to 6.5, give me a call. I'd love to look to refinance. So, well, you can put in your information right through here, folks. I don't sell the data. I actually just put it into an Excel spreadsheet, and I'll be the one calling you personally. We have many videos through here. I have over 3,000 videos on my YouTube channel. So check out just some of the highlights that we put through here. If you're looking to buy that first house, understand credit a little bit more, even looking at a VA refinance, hopefully we can help you out. So thanks for watching. God bless. Have a fantastic evening. Make sure you join me tomorrow morning at the opening bell to see how this mess ends or starts tomorrow, because it's going to be a long 4 days in the markets. Take care, folks. See you then. Bye-bye.